Hi, I'm Chris Kirby. I'm the Head of Specialist Distribution and Key Accounts at The Mortgage Lender. The Lumi product is designed to support customers who have had more recent or more significant periods of adverse credit. So we have a core range which will allow some what we'd probably call milder adverse or more historic adverse. The Lumi range is very much supporting those who have had more recent episodes, and it can be a number of defaults, CCJs, missed mortgage payments, recently discharged bankrupts. So there's a number of people who, again, typically underserved by high street mainstream lenders, that the Lumi range is there to support. Yeah, so if somebody will have been bankrupt, they've had a bankruptcy order placed against them, they can get that discharged, and then effectively they're then in a position now to lend. So the Lumi range will give them the flexibility to be discharged as recently as 13 months ago. Depending on how recently they were discharged will depend on whereabouts in the Lumi range that they actually qualify. So the longer ago that they were discharged, they'll be, say, a Lumi 1 type customer. If they were more recently discharged, then they're going to be a Lumi 3 customer. Yeah, so we're flexible. We understand that people have financial difficulties in some cases. We understand that people will default on their loans or their credit card payments, whatever that may be. So with the Lumi range, really flexible for customers. You can have as many as 4 defaults in the last 36 months. As long as the last 6 months they haven't defaulted on a loan, credit card, etc., then the Lumi proposition will be there to support them. We'll be able to help them. One of the big things with the Lumi range and with TML as a lender in general, it's manually underwritten. So we have humans that are looking at customers' credit files, and we're looking to understand their circumstances, which then forms the decision to lend. There's no value on the CCJ itself. We just put the 2 things that we're looking for is the date of registration and the number of CCJs registered within that period of time. Again, the Lumi range fully understands that real life lending, these are normal people that this happens to. So with the Lumi range, we can consider up to 3 CCJs in the last 36 months. Again, as long as there hasn't been a CCJ registered in the last 6 months, then it's something that our Lumi range can support with. We do see them, and I think over the last couple of years, with everything that's gone on during the pandemic, household finances being constricted, maybe self-employed people unable to work, it will have had an impact for many of them on their ability to make their mortgage payments. They would have absolutely wanted to, but for reasons beyond their control, they've maybe missed the odd payment here or there. So the Lumi range offers a real increased level of flexibility for customers who have had issues or had missed payments on their mortgage. So we will allow up to 4 missed mortgage payments in the last 2 years, as long as there have been no missed payments in the last 12 months. Yeah, with the Lumi range, we can consider payday loans that have been taken. I think there's a bit of there's probably a lack of market education around payday loans. So you will see customers have been advised to take a payday loan because by repaying that will demonstrate that your ability to borrow money short term and repay it. Actually, mortgage lenders don't typically like that. Again, TML, we understand that people will take payday loans for different motives. However, we have got that flexibility. So if we're looking at an application, as long as there's been only one payday loan taken out in the last 12 months, then we're absolutely fine with lending to those types of customers, and that's across our Lumi range.